But as I look at the board, I can't help but notice some things that you need to be aware of, you being the viewer or radio listener. The data this morning seemed to have lit a fire in the market. Not that the equity markets weren't already pretty red hot, but we did have good ADP jobs, and we had a tremendously strong service sector reading from the ISM group, second highest reading ever, and the highest reading was the second month it was in existence back in 1997. But as I look up at the board, first thing I see is that the long end is really starting to hit its stride. We've taken out the 311 high yield close of the year for 10s. Doesn't mean we're going to replace it yet. We haven't closed, but it is an important first step. But not only that, as Carl mentioned, we shot through that 326 level in 30s. And for all you technicians out there, there's a variety of patterns and formations that have been violated, especially on the 30-year. I won't address them all. The important thing is when signals are important, you should get a validation in a number of different systems that you monitor technically, and that does seem to be the case. The 10s to 2s, and hopefully we have a one-week chart, has moved much closer to 30. It's trading 27.28, and this is hugely important for investors because not only in mid-September did the tax benefits run out for purchasing treasuries, what we really need to acknowledge is that the recipient of much of that institutional buying was on the very long end in 30s. So the notion that Jay Powell and company could be looking at a steeper yield curve is really good news. Now, the dollar index, you notice, didn't contribute in a dramatic way, but that's good because as it sits at almost a 6-week high while this is going on, all the pieces fit quite well. Now, for what I was going to talk about, can the rest of the globe catch up with us? That's hugely important. The data today shows we continue to jog all the competition. But Jay Powell and company, as the Journal aptly put today, is it with this new notion that less is more. I couldn't agree more. You don't need to be the transformer of the universe anymore, Federal Reserve, and that actually is a good thing. Less guidance is a good thing. Investors should look to the markets, not a group of Federal Reserve members for guidance on the future. And finally, an important date, October 14th, Bavarian elections. One of the big issues of the rest of the world competing better with us is all about Germany and the ECB, and Merkel's getting weaker, and the Bavarian elections on October 14th will give you lots more information on exactly how much weaker her coalition is. Wow, what a day.